just before 11 o'clock on Tuesday, April the 8th, 2014, and this is the daily report for gold and silver. We were looking for confirmation yesterday. We did receive that today. It's just a matter of where we want to enter the market itself. Gold and the rest of the precious metals complex is trading higher today, with gold, although just slightly off of its high, still up about $12 on the day. The low $12.9970, the high $13.1570, and as you can see, our current print is about $13.08, $13.09, putting it up, as I said, about $12 on the day. In the same way, silver is just coming off of its highs, but it is currently trading above $20, $20.27 on the high, $19.84 on the low. Current print, 20.04 more on silver towards the end of the show. Traders have gone ahead and put up this 320-minute chart. This is of the spot Forex market. And I've got a couple of different fib retracements because what we want to do is, in essence, plot where we believe this market could in fact go. And to do that, what we're looking at is as follows. First of all, we have this long rally up. When we take a look at the rally itself and the correction that followed, it didn't really line up. As you can see, I've got a 50% retracement off of that move here, 61% retracement right in here, and it really literally fell right within the middle of that, really giving us no clear indication that we've hit a solid bottom. And that's why my current belief is that probably what we're going to see on this basic corrective phase here is some sort of an A, B, C type correction, and let me show you what I mean. So let's assume that once this market came in, we're going to get some sort of an A, a B, and then a final C, the C taking us to a 61% retracement. We talked about this model a little bit yesterday, and if this model is to be the way the market unfolds, here's what we want to consider. Typically, our B wave is going to be anywhere between 50 and 75% that of the A wave. So when we look at our basic A wave, and this is that A down, and then what I've done is I've created a fib retracement to plot this in this way. And so what we get is 50% takes you to 1334, and then 1364 is the 76% retracement, so just shy of that. And this would be the targeted area that I would look at, and I believe we could see the market move to the upside right within this band. Market's trading roughly at 1307. As you can see right here, it is off of the highs. But what we're really seeing when we take a look at this market is we get a spike, a correction, a spike, a correction. We got another spike here. So I believe simply what we're doing is we'll get a small correction before it continues to move up. As I said, if we are in fact in this wave, and this would be our A wave here, our B right here, and then of course our C would follow, we still have the opportunity to see a fairly good trade as this market moves higher, anywhere between, call it 1335 and maybe 1365. So traders, here's the thing. When we take a look at our daily chart of gold, we haven't gotten the kind of clear signals that I wanted. We absolutely, you get this engulfing bearish here, you get your confirming candle on the following day, market comes down, we got the engulfing bullish, but then the following day we didn't get confirmation. Then again, we got another market that had this long move, or sharply higher move, I should say. Now it didn't engulf, then that was followed again by this very short kind of corrective action, and now we get to spike up. Really kind of interesting, because if you look at some of the rallies, it's a very odd occurrence really to see this type of candles develop, and it's really not until you look at either a 2 or 3 day, or especially the weekly, that some patterns begin to emerge, especially the weekly. And let's go ahead and pull that up. Now I've just done just that. This is the continuous contract of COMEX. Time permitting, we might look at the spot market, but here's what we're getting. when we look at this particular set of candles, you can see that last week, of course, we're just into this week, we had this, what I'm calling an on-neck pattern. It's an incomplete piercing line because for it to be a piercing line, of course, this green candle would have to close at or above the midpoint of the prior week. It has not. But you are now getting a small green candle. The week's just started, but it does have a higher high. It has a higher low, and it is green, so it's met the criteria. The other thing is that when we look at this particular candle right here, it is very much like a hammer. Now, it does have a very, very small tail on the top, but it does have a very long tail on the bottom. You want to have a tail that's roughly 2 to 3 times the size of the real body for it to be a hammer. So as I've called certain patterns, it's hammer-esque, so to speak, but it's definitely giving us an indication that this market has bottomed off. More importantly, that what we're seeing is some sort of a V, that pivot point, and that's, of course, what we look for in the marketplace in terms of technical cues. So traders, I've gone ahead and pulled up our weekly chart. This is of Forex, or really spot gold, and when we look at that, you can see that it's almost the same candle pattern, but this is really because the highs and lows were just slightly different. You can really see where this tail is absolutely meeting the criteria of at least 2 to 3 times the length. So that combined with this particular higher closing candle, as long as we see it continue to move to higher ground, this is absolutely giving us a buy trigger. It's an aggressive buy trigger right now, and the reason that it is aggressive is we haven't gotten the kinds of clear-cut signals that we usually get in terms of candlestick patterns, but we are getting the patterns that are necessary to really forecast some sort of a pivot point. And as I said, what we're looking at now, if it's going to be some sort of an ABC, we do have some upside potential. Want to be careful, obviously, because if we do get that final C down, we really want to position ourselves long at that point, but be out of any kind of longs that we're in as the market moves to higher ground. And the higher ground, of course, that I'm talking about is that 50 to 75% range of A. Now, when we convert our weekly into our Japanese average, of course, because that's going to always be a lagging indicator, we're still showing solid red, but what you are seeing is the fact that these candles are getting very, very small, so you would see it really pivot. Where you're going to see the Japanese average really kind of convert is in our daily chart. And so what I've done is I've gone ahead and pulled up our daily chart. This is standard candlestick format. We'll go ahead and convert this to our Japanese average so you can really see that here we do get a pretty strong indication over the last 3 days. It's really almost textbook when we look at it through the eyes of the Japanese average. You've got the market coming down. You have the lack of tails on all of these candles as it comes down. You get really 2 pivotal candles. One is a very, very small bodied red candle. You can see all of a sudden you get this tail, then it goes to a pure doji, and then it goes green here. So we've had our second and third day on the Japanese average, and that's why at this point I do believe you can enter the market really from the long side. It's still an aggressive trade, and I am recommending that we do enter either in the evening session or on tomorrow morning session. We have come off of these highs. We're at 1308. As long as it's above 1300, I'm pretty comfortable with it. We're going to want to put stops roughly below, at least take it 3 days. And so if we go to 3 days, we're looking at about 1285. So you want to place stops at 1285. Just below that, you can enter the market from the long side as an aggressive trade. So traders, what about silver? Silver's been acting differently than gold. There's no doubt about it. But I do feel safe. This is 1960. I do believe that we have good support at 1958. That is that 1 fib retracement area. We're currently trading just above $20, as you can see, 20.04. So if you enter a position on the long side in silver, stops need to be below 1958. And again, this would be an aggressive buy signal. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Do apologize for some difficulties we're having in the website. We are currently moving it to a dedicated server that will allow us 99.9% uptime, and so that should be resolved by the end of the day. Again, my apologies. Have a great day. Bye-bye.